Jackson. Thanks so much for listening in to 3 Minutes of Real Estate. I appreciate you joining me for this topic that is very top of mind. I just had a great conversation with a dear friend who happens to be a fellow real estate investor. And we were kicking around thoughts and ideas around how we're approaching and thinking through this current market environment. And I have to preface this with, this is by no means constituting any type of investment advice. This is purely my opinion. And in that, it's not all encompassing. There is so much for all of us to be thinking about that I certainly want to hear your additional thoughts and perspectives and potentially questions you have with regard to the topic. So first for me is geography or markets. And I like to see a high growth market where the national rent growth is currently about 13.8%. I like to see markets that are potentially achieving a higher rent growth rate than the national average, and also have a nice mix of Fortune 500 and diversification across industries. That to me really constitutes a high growth market. And then second is cash flow, which may potentially be a bit more self-explanatory. But in addition to just investing for cash flow, I'm also looking to move some money from what my husband and I have invested in fixed income, where we've definitely felt that yield pinch and may potentially not be achieving the returns that we had set out to in that portion of our portfolio. So looking to move additional capital into real estate. And the third one is economies of scale. My husband and I do have some single family investments that took a bit of a hit in the midst of COVID relative to vacancy and also just non-paying tenants. And that month over month hit on our cash flow affected pretty significantly our annualized ROI for each of those properties. So by economies of scale, I'm thinking more of the large apartment and more syndication space, so a passive exposure with that type and size of asset. And that's purely because just by numbers, that vacancy risk is just mitigated a bit, especially relative to it going to zero by one non-paying tenant. And then last is a big one for me, which is watching where the institutional money continues to flow. And the last several years, we've seen quite an influx of institutional capital into real estate, particularly multifamily. And for me personally, that just gives me a little confidence in there being a achievable exit strategy based on a additional capital in the buyer's pool. And by that, I mean institutional money generally has a long-term time horizon, so 20 to 30 years, and care a bit less about those short-term market fluctuations. So something else that I really focus on. Again, not investment advice, purely my opinion, but I look forward to hearing from you as well. I know there's so much that we couldn't cover in our time together today. And again, please respond. Make a comment with any questions you may have, and we'll hopefully address them and approach them in future time together. So thanks again for listening, and I hope you all have a great day.